Hello, welcome to my channel today. This is your King's Tutor. Okay, if it's your first time of joining us, kindly like, comment, share, and subscribe to our channel. Okay, so we are available in all social media. We're on Facebook, on YouTube, on Instagram, and on TikTok. Okay, check the King's Tutor on this platform. Okay, now today we want to continue on our series on accounts for non-profit making organizations. Okay, so we started the introduction months back, and we talked about different accounts to be prepared in a non-profit making organization. Okay, so we saw the introduction, we saw the receipt and payment, we saw the format, income and expenditure also, we saw the format, and also the balance sheet, and also the prepare statement of affairs. If you have not seen that video, check in the link below in my YouTube channel to check the introduction part before this. Okay, so in the introduction video, I gave 3 ways a question can come, okay, in account for a non-profit making organization. The first one, I said, when I give a question and they ask you to prepare the receipt and payment accounts, income and expenditure on the balance sheet, okay, because the statement or the data given is not in any account already. So that's the first part. The second one also, it means that the statement, the information is already in the receipt and payment account and other additional information which you'll be asked to prepare the income and expenditure and the balance sheet. Okay. While also the third one is when the business is involved in a trading activity, you'll be asked to prepare the bar trading accounts, the income and expenditure, and the balance sheet. Okay. So I want to see the first one, which is when the information is given plainly and you're asked to prepare receipts and payments, income and expenditure, and the balance sheet. Now the question said, the following information concerns the activities of a recreation club for the year ended June 30, 2002. Now it said, building July 1st, 2001, 5,000, sports equipment, 15,000, cash, 9,000, loan, 1,2. Now it said cash donations received, 14,000. It said cash sales of dance tickets, 2,000. Subscription received 8,000, entertainment expenses paid 11,000, salaries paid 2,000. As a sports equipment worth 5,000 was brought for and paid by cash on July 12, 2001. Subscription owed by members during the year amounted to 200. Subscription received in respect of 2003 was 5. Subscription received in respect of 2009 was 300. Now it said salaries due and unpaid on 30th June is 400. Depreciate equipment by 10% and building by 5% around. Require prepare receipt and payments, income and expenditure on balance sheet. Okay. So remember we said the receipt and payment is the same way we prepare our cash book for a trading activity. Debit what is received and credit what is being given out or what is paid. Okay. Remember, one of the rules is that no accruals or adjustment will be posted to the receipt and payment account. Okay, so let's start. At the first one, building, there was no statement as regard if it was paid or received. Sports equipment, no. Now, cash, as at first, it means this is the balance that was brought forward. So, we have balance brought forward, 9,000. Okay, so we continue. Loan. Now, I said cash donation received, 14,000. So, they received. So it will come here as donation. How much is it? 14,000. The next one, it said cash sales of dance tickets, 2,000. Okay, so that is tickets. They sold tickets, so it means the money is coming in. So sales of dance tickets. Okay, how much is it? 2,000. And the next one, it said subscription received, 8,000. So subscription, okay. The next one said entertainment expenses paid, 11,000. So this one they made payment now. Right, entertainment. How much is it? 11,000. next one said salary paid 2,000. So salaries 2,000. Okay. The next one said sports equipment worth 5,000 was bought for and paid by cash on July 12, 2001. Okay, so it means they bought sports equipment and paid by cash since they are paying also. So it will come here, equipment as well, 5,000. Okay, so we'll check if there's other item that is supposed to come here. Subscription, old, these ones are adjusted. So there is no other item. So we're going to add to check our balance. So if you're looking at it, the debit side is greater than the credit side. So debit side, we're having 33,000. While here we are having 19,000. So we'll have balance carried down. 33,000 minus the total of this, which is 19, will give us 15,000. Okay, 18,000. Give us 15,000. So if you add up, it will give you 33,000. Okay, so that is our receipt and payments account. Okay, so the next one is to prepare income and expenditure. So remember, the income and expenditure account is the same thing as the what? The profit or loss or the profit venture. Okay, so it means all items in the debit side of the receipt and payment account will be posted to the credit side, excluding the balance default, while all items in the credit side of the payment, receipt and payment account will be posted to the debit side as expenditure, excluding payments made for assets. Okay, so but in the income and expenditure account, it makes room for adjustment and accruals. So we have it here, so let's just adjust them before we post it to the income and expenditure account. Okay, so now let's adjust. The first adjustment we want to look is the subscription. Subscription. The subscription, the first amount they received is 8,000. So they received cash 8,000. But along the line, they said subscription owed by members during the year amounted to 200. It means during the year there were members that did not pay, which is 200. But now we want to know the actual subscription. So we are going to add, because since they said owed, it means it is accrued. Okay, so all accrued should be what added for the current year. So we are going to add arrears of how much? 200. So this will give us 8,200. Okay. Now the next one, it said subscription received in respect of 2003 was 500 naira. Now it means there are some persons that paid in advance. Remember, we are dealing with 2002, but it says some people paid in advance. So if they paid in advance, it means we are going to deduct that money. We want to know what is the actual income that was supposed to be earned for that current year. Okay, for the club. Okay, so for as regards subscription. So for subscription that was paid for 2003, we are going to less it. And also they say subscription received in respect of 2001 was 300. So there are some persons that was holding previously for the previous year that they paid. Okay, so since in the 2001 also, and they said it was what subscription for 2001, it was arrears as at that year. It means we might have recorded that. So we are going to also less the amount. So the two items we will less, we have less arrears for 2001. Okay, arrears for 2001, which is 300, and also prepaid. They paid in advance for 2003, which is what? 500. So 82 minus this will give us 7,400. Okay, so that's subscription. Now, another adjustment is salary. They say salary is due and paid is 400. Remember, anything that is due or accrued is what? Accrued. So we're going to add it to the amount already paid. So we'll say salary. The next one is salaries. Alright, amount paid. Amount they paid is 2,000. Add due, which is what? 400. So I have 2,400. Okay. Another one is saying depreciate equipment by 10% and building by 5% per annum. So we're going to do depreciation. Depreciation for equipment now. It said is what? 10%. So it is 10 over 100 times the cost. Now what is the cost? Check here. We have sports equipment that was brought forward. That's the assets, 15,000. But in the cost of the year activities, they bought. Look at it. It says sports equipment worth 5,000 was bought. So it means they bought new one 5,000 plus the one existing 15. That is what 20,000. So our assets, the cost is now 20,000. So 10% of 20,000 will give us 2,000. So that is for equipment. Now the other one is for building. So building is 5%, which is 5 over 100 times 55,000. That's the cost. So we have 55,000. 5% of 55,000 will give us 2,750. Okay, those are the adjustments that is supposed to be done. Now let's go to the income and expenditure. So we'll now have the income and expenditure for the year ended 30th June 2002. Okay, 30th June 2002. So what do we do? Just move all items in the what? In the credit side that was paid in receipt and payment and post here, excluding those ones that was paid, those assets that was paid for. So the first one, entertainment, is 11,000. So we'll bring it here as expenses. Entertainment, 11,000. No adjustment was made. The next one, salaries. Remember we did adjustment with salaries, which is now 2,4. So it is what we post here as salaries, 2,400. Okay. So equipment is an asset, remember, so it will not come here. It is not an expenditure. It is a payment made. Okay. So that is the only expenditure. Now we'll now post our depreciation expenses for equipment. So post depreciation for equipment is 2,000. Then for building is 2,750. Okay. Now the credit side will now be what they receive apart from balance brought forward. So the first one is donations, 14,000. Another one is sales of dance tickets. So just write dance ticket. How much is it? 2,000. Another one is subscription, 8,000. But now we did adjustment, which is now 7,400. So subscription 7,400. I think that is the income. So let's get to find if there is surplus or deficit. Okay, so we'll add up this. So if we add up this, we'll have this as 23,400, which is greater than this part. So it means we're going to have a surplus. Okay, this part, if the income is greater than the expenditure, we have surplus. But if the expenditure is greater than the income, we have what? Deficit. So this part is 23,400, which is bigger than this. So the difference will give us a surplus which is
5,250. So if you add up, you have 23,400. Okay? So that is income and what? Expenditure. Okay? Now let's prepare the balance sheet, which is the last part. Welcome back. Now let's prepare the balance sheet. Okay? Now remember, before we can prepare the balance sheet, we should have our accumulated fund. You remember that? If you don't know how to get this, please check in the introduction video, which is below the link in my YouTube channel. Okay? In the description. Okay? So to get a balance sheet, we have to get our capital. For a trading business, it is called capital. For a non-profit, it is called accumulated fund. And it is done using our statement of affairs. Okay? So now it means we are going to prepare our statement of affairs first. So we have our statement of affairs as at. Now the statement of affairs, it is the opening capital now we are looking for. So we are going to use items at the beginning, which is July 1st. As at July 1st, 2001. So we are using only items at the beginning. Only items in July 1st, 2001. Only items for 2001. Okay? So remember I told you it is what? An abridged balance sheet. It looks the same as the balance sheet, but the balancing figure will give the what? The accumulated fund. So we'll post items for assets. So we have assets. So the assets as at this date. So we have our building. So we have building as what? 55,000. We have sports equipment 15,000. This one is at this date. Please don't add this. Remember this one they said is at July 12th. Okay, so you can't add this. So this one is at first. So we have equipment as 15. So we also have cash as 9,000. Okay, so that is that. Now also our liabilities. Our liabilities now will be loan. Loan is a liability. So our liability loan is 1,200. Okay, so there is no other item as at July 1st here. Now let's check at this part other information. Remember they said subscription received in respect of 2001 was 300. So this is 2001. Okay, so it means as at then it was accrued. So it means they're having accrued subscription. And subscription is an income, which is accrued income. Okay, an accrued income is a what? A current asset. So it will come here as accrued subscription, which is 300. Okay, so that's all. So if you add this now, this will give us 55, 55 plus 15 plus 9, that's 79,300. And these two is supposed to be the same, 79,300. So you deduct it from your liability, so it will now give us our accumulated fund. So 79,300 minus 1,200 will give us 78,100. So 78,100 is what? The accumulated fund. Okay, so we can now prepare our balance sheet. Okay, so said balance sheet as at 30th June 2002. Okay, so remember our balance sheets will have our fixed assets have cost, depreciation, and net book value. And we also have financed by. So I have accumulated fund. Our accumulated fund rate is 78,100. The next one is add surplus. Remember our surplus in income and expenditure. Okay, so I wrote it out before I cleaned it. That is 5,250. So I have 5,250. Okay, so now we come to the fixed assets. Now let's check our fixed assets here. The first one is building. So our building is the cost is 55,000, right? So the depreciation of our building is 2,750. Okay, so the net book value will be 55,000 minus 2,750, which is 52,250. Okay, so that is for building. Another one is the equipment. Now our equipment now is summation of the two, which is what 20,000. That is this plus the one that was bought. Okay, remember that. So depreciation is 2,000, which is this. So 20,000 minus 2,000 will give us what? 18,000. Okay, that's the only fixed assets there. So we will have this will give us 5,000 as total. This will give us 4,750. Now this will give us 05206. That is 60,000 or 70,250. 70,250. Okay, so that is fixed asset. Now our current assets. Our current assets now will not be cash. Now the cash will be, remember our receipt and payment accounts. The balance carried down at the end. I wrote it out. Which is 15,000. The balance carried down. Okay, not what the one brought forward, not this. Okay, this one was from the previous year. And the balance carried down at the end will not be the 1 year, which is 15,000. Okay, so we're going to check other items also that relates to 2002. Now, if you check here, our subscription, it said owed by members during the year amounted to 200 during the year. So that is accrued income again. So which is accrued subscription. Which is 200. Okay. Why they said they received subscription for 200 for 2003 as what 500. So that is for our liabilities now. It means it is prepaid subscription. Subscriptions and income. So it is prepaid what? Income. So I'm going to write prepaid subscription, which is 300. Okay, so I think that is the only thing that is supposed to come to the balance sheet. Okay, and also the loan. Look at our loan. It's 1,200. Okay. I have recorded all this. Now we'll check again. Now salary is due and unpaid. We need adjustment. So that's accrued salary, which is 400. That's accrued current liability. So we have accrued salary 400. Okay. So to add this will give us 15,200. So to get the total here, to also get the total here. So 15 times 100 plus this will give us 0, 5, 4, 5, 8. That is 85,450. And this will also give us, now remember this is 500, please. Prepaid subscription for starting at 500. So this will also give us 0, 5, 4, and 8, 5. That is 85,450. So it balances automatically. Okay? So that's how to prepare when a question, that's the first part or the first way a question might come from account for non-profit, when you'll be given a plain question, you're asked to prepare receipts and payments, income and expenditure on one of the balance sheet. Okay? If it's the first time of joining us, kindly like, comment, share the video and subscribe. Okay? Follow us on all platforms. We're on TikTok, Instagram, Facebook, and on YouTube. Okay? Thank you very much.